Hey, what's up everyone? My name's Michelle, and in today's video, I'm going to share you a trading strategy for crypto and a 5-minute scalping strategy. So log into or go to tradingview.com. We are going to make a few changes, but initially this is what the end result of your chart is going to look like. So for the purpose of this video, I am going to walk you through on how to start and get your chart started. So quickly going to erase some of these indicators here. So we are going to be using 3 different indicators. So the very first thing that you want to do on your trading view is you want to switch into a 5-minute time frame. So open up this arrow, 5 minutes here. And second thing we want to do, instead of candles, we are going to go into Heiken Ashi candles at the very bottom. The difference is if we go into candles, you can see how sporadic these red and green lines are. But when we change it over to Heiken Ashi, it goes exactly either downtrend is red and uptrend is green. The first indicator that we are going to do is EMA, which is a moving average exponential. We are going to change this line here and change a few settings. So in under inputs, we're going to put it as 200. And then the style again is just cosmetic. For this reason, I do want the line to pop out. So I'm going to put it in as white and we're going to bold the line itself. Perfect. So easy to see. The purpose of this trading strategy is to filter out all of the noises and just have that clear buy and sell signal. The second indicator that we want to put is Parabolic SAR. So PAR, it's this one here. And there's nothing to change in the setting. We see the dots at the very top and the dots at the very bottom. So for this indicator, the dots at the very top show us a selling signal when we should be exiting out of the market, and the dots at the very bottom trigger a buying opportunity. The last indicator we are going to add is Relative Strength Index, or in short, RSI. Good. The only thing that we are going to change in the settings here, so we're going to click on settings at the very bottom. We are going to be taking off RSI based MA. We only need to work with one line here. We are going to remove the RSI upper band and the RSI lower band. We're going to focus only on the middle band and make sure that it is targeted at 50. For cosmetic reasons, I am going to switch the line here, we are going to go in here, switch it to a white line and then a bold line. Sorry guys, this is the middle band here. So again, white line, and we're going to change it instead of dash line, we're going to change it into a line, and again, just bold it out. We are going to get rid of RSI backfill and Bollinger Band's background fill. And the last thing too we're going to change is this line itself. We do still want it as bold as we can. So again, we're able to see it clearly. You can change it to any color, honestly. I'm just going to do it white here so it's just easier, and possibly change this into yellow. Perfect. Okay, so we have our 3 indicators, our EMA 200, our Parabolic SAR, and lastly our RSI. Now, there are a few rules in the trading strategy itself, and one of the rules here is if you are trading a long position, you need the price to be above the 200 MA. So again, because we made it so bold, it is clear to see when we should be making long positions. And when the price is below the 20 MA, you want to be making short positions. For the purpose of this video, I am going to be focusing more on long positions. Okay, so we're going to map out our rules here. So here is for long position. Rule number 1, price above 200 EMA. Rule number 2, Parabolic SAR. Sorry, guys. SAR below price. Okay. Number 3, green candle. No wick. And when I'm writing these rules, I am going to go through some examples and cross them off so we can go through basically a good area or a good position to take a look at. And we're going to see the profits as well. The last rule that the RSI, it needs to be above 50%. Okay. 4 rules here: price above 200 EMA, the parabolic SAR is below the actual price, green candle, no wick, and the RSI is at 50%. Pretty simple here. Let me see if I can increase this so it's easier for us to see. Perfect. So let's work on here. Okay. So first rule, price is above the 200 MA. If we're taking a look at this, I'm going to zoom in so it's easier again to see. Price, again, just touched the 200 MA, but is still considered to be above it. We want to take a long position. So rule number 1 applies here. The parabolic SAR is below the price. We'll notice here, after it sells, it's going to trigger a buying opportunity once this trend is over. So right in this candlestick here, we can see it changed to green. It changed to green. Perfect. So ultimately, depending on where, we see these dots, we know price is above 200, parabolic SAR is below the price because we see these dots formulating. And again, we need to check if there's a green candle that has no wick at the bottom. So what I mean here is this candlestick right here. If you see, it's got a little tail or a little line at the very bottom. These are called wicks or tails of a candlestick. We can see the first candlestick here that opened up, the dot at the very bottom has a wick here. So we want to wait until this close and wait either on the second candlestick or the third candlestick. Okay, depending on where you really want to make sure that you're able to minimize the risk. So because the second one has no wick, we want to check on rule number 4, which is the RSI is above 50%. So here, if we were to go in on this candle, it's at 43%. No, we want to wait 50%. This candlestick here, above 20 MA, we see the parabolic SAR at the very bottom. We see the RSI here is at 53%. It has no wick at the very bottom. I'm going to go for a long position. So let's say we buy it at the very top here. We want to put our stop loss, so minimize the risk, at the last low of the previous candlestick. Okay, so right here. And typically for me, my target would be a ratio of 1 to 5. Okay, 1 to 5. So we can already see in just a matter of minutes here, 5-time intervals, it's already hit my targets. However, we're writing on long until the parabolic SAR, so these dots here, form at the very top, we're not going to sell quite yet. Okay, notice the RSI is increasing as price is increasing. If we were to ride this entire trade until we see that sell signal up here, okay, right there, all the way up to here, our profit gain would have been 20%. Okay, so that is how strong this type of indicator does, and it's just a matter of following 4 rules. Let's take another example here. So we're taking a look again at Dogecoin for crypto. Let's take a look at this guy right here. Okay, I'm going to zoom in. So this one here is a little tricky because there's a lot of wicks at the very bottom. But if we follow the same rules applied, we would be able to get a good profit. So long position, price is above the 200 EMA, done. Parabolic SAR is below the price. We can already see switch from selling over to buying, we might be on the first candle or the second candle, depending on what we observe. Because at the very end of the selling, we see this wick, this candle has no wick at the very bottom. It triggers a buying opportunity. Typically, be safe, wait until this candle does close to really see what is going on in the marketplace, because sometimes this could expand the selling and we don't see the dots actually switch over until this candlestick has closed. Okay, so now we know Parabolic SAR is below the price. Green candle, no wick, essentially we see in these three candlesticks. So you can wait until the first dot, the second dot, or the third dot. So long, again, it has no wick at the very bottom. And lastly, confirmation of the RSI at 50%. If we took a position here at 49%, we may be in a risk for the RSI and the price to continue to sell. That's why we need to wait until the dots are at the very bottom. Going into the first dot, our RSI was at 55%, the next one 55, and the third one 55. So we've confirmed all four rules. We are going to take a long position. So let's say again, we put our long position here. Our stop loss would be at the very last swing low candle. And we're going to take a profit here on relatively ratio of 150. Perfect. And you can already see it was filled a few candlesticks afterwards. Okay, a few candlesticks afterwards. And if we actually wrote this all the way to the top here, we would relatively have the same win ratio of 1.5 because the sell trigger right here. Now I'm going to show you what would happen if you were to go for price above 200 EMA. PARS, the Parabolic SAR is below the price. The green candle has no wick, but the RSI was below 50. Okay, this is something, when you're eager to get into the markets, but it just doesn't work the way that you want it to. Okay, let me see if I can find one. I don't know why I'm dragging that and not the actual rules here. Okay. So right here, we can see again, the market kept being below 20. And let's say that we are eager to get into the marketplace. We just know that the price is going to break above 50 and then continue on. We're trying to predict a breakout. So number one, again, price is above the 200 EMA, which we've already confirmed. There is our line. So this rule does apply. The Parabolic SAR is below the price. Let's say we're taking on this trade here. So we can see that Dogecoin had a huge sell-off here because the dots are at the very, very top. We finally wait for a position here. We see the Parabolic SARs at the very bottom, okay? Again, the green candle, there is no wick. So here is the dot sell-off. Here is our candlestick, no wick at all. We trade in the very first one. 10 minutes goes on. The RSI again was only at 44%. It's only 6% off from 50, but we wanted to ride it and see if it does go over 50 in hopes for a breakout. Instead, it went up for 10 minutes and then it crashed down. So even though the Parabolic SAR says this is a buying opportunity, it is really not and puts you in a big risk here. Because if you bought it at the very top here, and your target is 150, your stop loss is down here. Take a look at how bad that trade would have went. You would have been trying to catch up here, and then it's did a selling and then a buying again. So chasing after breakouts in this trend or trading strategy is not a good idea. Make sure you stick to these 4 rules to get the maximum win rate that you can. So I'm not saying that this trading strategy is going to work 100% of the time. It also depends on your discretion as well. So please make sure, again, write down These rules, I'm going to have it down in the description below as well. So it's just easy copy and paste, or you can just write it down. I am not a financial advisor, so any of my videos that I see here and this trading strategy is just for educational or information purposes. But definitely let me know if you tried out this strategy, if it worked for you, what was your win rate strategy or win rate ratio as well. I'd love to hear that. Like and subscribe to the channel for more trading strategies, but I'll see you guys next time. Bye.